Good morning and welcome to the very first VOF podcast. This will be a monthly series that accompanies our newsletters to investors, where we will share over a coffee, or in this case, a cup of tea.
And by the way, I noticed my teacup looks a lot more Vietnamese than yours. Just saying.
I know. Double expression shot there.
Sorry.
Thanks, Mike. We're going to talk here not just about the performance of the fund, but also break down the stock market and the economy. Because we all know that when we do think about investing in Vietnam, it starts very much with the macroeconomy, right, Mike? So my name's Khanh Vu, portfolio manager of VinaCapital Vietnam Opportunity Fund, $1.1 billion listed fund on the London Stock Exchange. You can read all about it in our monthly fact sheet. But before we move on, talking about our fact sheet, Mike, we just won again Best Fact Sheet Award from the AIC, the Association of Investment Companies. Second time we've won this, and credit goes to Tom Ha from our team and the great efforts that he's done to get our fact sheet to where it is today. I think
it's actually a very good read, I have to say. Well, I've been in this business 30 years, and it's entertaining and informative.
And this is where you, Mike Kokalari, Chief Economist VinaCapital, comes into the picture. We don't do you much service. We give you a tiny little bit of real estate in the corner of the newsletter. However, there's a great link to your longer format. Mike, you've been a regular contributor to the firm, whether it be the regular newsletters, the webinars, on the conference circuits.
I'm all over the place.
You TikTok, YouTube?
Not yet.
Okay, but YouTube. So it's great to have you on the channel. And really today we're here to talk about both the performance of the fund over the past month, but very much looking at the broader scope, the economy, and how does that look towards the end of the year and into 2026. Mike, let's get into it. We're 3/4 way through the year now. What have we achieved? And more importantly, what does it look like for us to 2025 and to 2026?
Well, the economy grew almost 8% in the first 9 months of the year. Actually, it's really amazing how strong the exports to the U.S. are. Right. Up almost 30%.
Which is kind of counterintuitive to this tariff story, right?
Yeah. I mean, we were expecting that after the tariffs kicked in, this would kind of roll over. But actually what's driving it is high-tech exports are up almost 50%. Apple moved a lot of their production of more MacBook stuff here earlier in the year, and it's really keeping everything high. The other thing is that we have a lot of tourists coming, particularly from China. Tourism is up over 20%. So these are kind of the two main factors that are driving things like right now this year.
And I think on that tourism front, you can see that Golden Week just finished up, a Mid-Autumn Festival from China and Hong Kong last few weeks. Huge amount of tourists on the streets here in Saigon. Also, the world's largest nation, India, 5-hour flight away. A lot of tourism from there. So Vietnam has become this incredible, interesting sort of destination for regional tourism, which is.
And so for next year, I think those things will probably moderate from this kind of abnormally high levels, but not collapse. I think they'll just kind of come back down to, for let's say for exports to the U.S., maybe we'll grow by 10% or something. So this year's around 30%. Maybe we'll normalize to something like 10%. The really big news for next year, I think, is that this year in Vietnam, the domestic consumption has been, I wouldn't say weak. It's not weak. It's not strong. It's just kind of bumbling along in the middle. And I think that's because people are basically still rebuilding their savings after, people depleted their savings after COVID, during COVID. And if you look at how high the savings rate is now and how long it's been at that elevated pace, two things. First of all, it explains why we've having the revenues in some of the consumer companies haven't really taken off. Right. But if you do some back of the envelope calculation, I think next year is going to be a good year for consumption.
And well, if you think about what's happening in the stock market, though, that sort of paints a very different picture. Howard Marks, chairman, co-founder of Oak Tree Capital, musingly said, trees don't grow to the sky. The performance of the stock market in the last quarter and year to date has been really strong. Since the April tariff announcements, the market is up about 25%, and year to date up about 30%. You're seeing that, as you indicated, strong translations into the economy and now into companies. The corporate earnings looks like they're recovering, particularly from these COVID lows into perhaps a phase of recovery mean reversion back to valuations and growth rates that we've seen.
And that big increase in the stock market is going to make people feel more confident to spend too.
Right. So looking at that, what's been driving? We hear this thing about the private sector reform and the promotion of private sector champions. Perhaps sort of dip your toe into that for our viewers.
So there's been an awful lot of announcements on this topic, and they're all very encouraging. How we think about it is, if you think about Vietnam's kind of long-term growth trajectory, all of these reforms, if they all come to pass, would probably add something like 2 percentage points to the long-term growth. In the short term, it makes the sentiment high, but it will take a little bit of time before they actually impact the GDP growth. But the long term, it will boost the economy a lot, for sure.
And I think in that sort of short-term view that we have, the sectors like real estate and banks have been really strong performers. They sort of tend to be the first to catch on to that growth, that growth trajectory and the growth spurts in the economy. We've also seen a strong performance in our fund. So the last quarter, if you think about up to the end of September, last quarter, NAV is up about 15%, share price is up around about the same amount as well. Again, a reflection of one, strong economy, but I think far more important is fundamentally that growth story is reflecting both in the public companies, but also in private companies as well.
The stock market, getting back to your Howard Marks, and anticipates what's coming. So people can see, like, we're going to have a very strong year for the economy next year. The reforms are going to support things kind of in general going forward. So not surprising that the stock market's doing really well.
And then if you think about our portfolio construction as well, our portfolio is about 15% into the consumer space. And if you sort of add the healthcare investments, which is unique because you really can't access healthcare opportunities on the public markets, but our healthcare portfolio,
like, impossible.
Right.
You can only do it by private equity.
So with that together, consumers make up over about 20% of our portfolio. So again, construction-wise, portfolio should stand to benefit from this recovery in the consumer story that you talk about. So Mike, we've been hitting sort of this bull market territory. The stock market's been all-time highs. It's been somewhat a very narrow-based recovery. The encouraging thing now is that we're seeing a much broader-based recovery and rally in the stock market. And again, a reflection of fundamentals which come into play, earnings growth that are being now reflected in somewhat of quarterly announcements from the companies. And that's sort of translating into some interesting investment opportunities that we're looking at. One of the other sort of catalysts has been this FTSE Russell EM upgrade, which happened in early October. And it's been long awaited. From how we'd sort of divining the announcement, it looks like Vietnam is going to be upgraded, and that's going to be made official in September next year. Certainly from a positioning point of view, it does make sense to start thinking about your allocation in the market from today. And within our portfolio, we've also taken advantage of this potential upgrade, the surge in the stock market, the level of liquidity in the market, and we've initiated a position into the second largest stock brokerage business in the country, SSI. We initiated that position in sort of late second quarter of the year. I mean, incredible performance. I mean, the stock is up about 60% since we entered over that quarter. Today, it's about 12% of market share of the market, and market cap-wise, it's went from just under $2 billion of market cap when we entered to today, almost $4 billion US. So, again, reflecting a very strong interest in the stock market.
It's like the stock market, the FTSE upgrade. They're getting it. The government has announced some developments on digital assets, cryptocurrency. I think they're really active in that as well.
And I think these are the themes that both you've written a lot about, and also within our portfolio, we've initiated some positions in some companies that are taking advantage of this resurgence. All this obviously is a catalyst to IPOs, right? And again, we've been sort of in this long dormant period over several years.
Since 2017.
That's right.
Basically.
Of no IPOs. And yet this year, and particularly in the last quarter, a significant volume of capital raising in the market, especially leading into 2026 as well. So we're looking forward to updating our listeners today, as well as viewers, on these investments in the upcoming podcasts. Mike, lightning round. Okay, so GDP for the year. What's your expectation?
I would say around 7.5%. A little bit of a, so we're almost 8% in the first 9 months. Maybe we'll flatten out a little bit. That having been said, they're pushing on the gas pedal really hard.
Right.
Could reach 8%.
Right.
I think for next year, again, like 7.5 to 8%.
And we're seeing this sort of step change in the GDP average growth rate.
Yeah.
Looking ahead.
Yeah, I think in the past years we kind of always looking at a 6 to 7 type range, and now I think it's more like a 7 to 8 type range.
Okay, and naturally the question is then, what about inflation?
Inflation is not really a big concern in Vietnam right now. You know, China's economy, as many people will know, is very weak, and that helps to put some, you know, downward pressure on food price. Food price inflation is very low here. Right. Inflation in Vietnam is a little bit over 3% right now. It's not really a big concern. I would say the big concern is really about the currency. This is the main thing we're really thinking about. So the dong so far has depreciated, depending on how you measure it, something like 4% year to date. I wouldn't be surprised if by the end of the year we get to something like 4 to 5% depreciation. And then again, next year we'll probably again have about a 4 to 5% depreciation. You know, the government is doing a lot to really stimulate the economy, which is good. And so that makes you feel comfortable that you're going to have good stock market returns. When you push on the gas pedal really hard, typically there's an escape valve someplace. Sometimes it's inflation. At the moment, it's really the currency. That's, yeah.
So these are sort of the risks that we also have
risk,
in purview at the moment.
Not worried about the trade war. I'm not worried about geopolitical things. I think really a bit of depreciation on the currency, which you more than make. Next year is going to be another very good year for the stock market. So yeah, maybe you make a good return on your investment, give back a little bit on the currency. It doesn't really matter, you know.
Mike, great session. I think that wraps up our first podcast. Look forward to next month's podcast.
Okay, thank you, everybody.
Hey, can I get a double espresso?
Coming up.